Good evening, everybody. Welcome to Saïd Business School. My name is Pegram Harrison. I'm a lecturer here, and I'm very, very pleased to welcome you all to this, our latest series on art at Saïd, aptly named, Art at Saïd. The purpose of this series is to see what productive conversations can come from two worlds that aren't as far apart as they might seem. We've also been working through a series of people representing the same organization and the same interesting intersection of business or finance on the one side and art on the other. We had the perspective of an entrepreneur and founder in our last speech from Philip Hoffman, which some of you may have heard. And today I'm pleased to welcome his colleague, Freya Stewart, who will take a more operational, financial, legal perspective to add to our growing understanding of this increasingly relevant, interesting, and changeable area of the intersection of business and art. So I hope that's what you all signed up for. I know it will be interesting. And without further ado, please join me in welcoming Freya Stewart.
Okay, so I'm just going to test my mic. Yeah, good. Good evening. Thank you very much for having me. It's a real pleasure to be here. The last time I was in Oxford, I was actually over the road. I was at law school here a long time ago. It's no longer a law school, so... and actually we used to come into this building to have some of our lectures. So yeah, interesting to be back. So just before I start, just to give me a bit of context, how many people here have been to either Philip Hoffman or Ruth Knowles's presentations, talks, just so I have some background? Okay, yeah, quite a lot of people, great. So yeah, I'm Freya Stewart from the Fine Art Group. I am CEO of our art financing business, and I'm also general counsel for the group. So two very different but also clearly interrelated roles, and I'll come on to that shortly. Before I just give a bit of background on the group and what we do, I'll just give you a bit of context about me and how I ended up doing this job from the law school over the road. I trained as a finance lawyer. I was at Linklaters for 5 years, Barclays Capital for 5 years. I'm a structured finance derivatives lawyer. That's my background. London, New York, Hong Kong, Sao Paulo. And after a while, I realised I didn't want to find myself in my 50s being a derivatives lawyer. As much as I loved it, and I did, I thought, let's try and find something that I have a closer inherent connection to and something more tangible, derivatives being probably the least tangible law you could possibly practice in. And I was fortunate enough to come across roles in the art market. So there is a growing field of art law, which some of you may or may not have heard of. It's really become quite a in vogue kind of career trajectory for some lawyers. There aren't that many roles available in the art market. I was fortunate enough to move from Barclays to be legal counsel at Christie's, the auction house in London. And from Christie's, I moved to the Fine Art Group. The Fine Art Group is a huge client of Christie's and Sotheby's. And I was doing a lot of their deals whilst I was at Christie's. I was particularly doing all the financing deals that we'll come on to in a minute, guarantee deals, again, we'll talk about those. And that's how I met Philip Hoffman, who some of you may have met. And Philip asked me if I would join the Fine Art Group to launch their financing business. He had been looking at this space for a while, thinking about it, and hadn't quite met the right person to kind of take the initiative and launch that business under the umbrella of the Fine Art Group. So that's what I did, and that's what I'm still doing, running that business. So what do we do? The Fine Art Group does essentially three things. The art investment funds is what the Fine Art Group is most well known for historically. It was the genesis of the group was an art investment fund. It was one of the first, if not the first, art investment funds to be launched about 20 years ago. So very well known for those funds. We still run those funds. I'm sure Philip has probably talked a lot about those, so I won't touch on those in too much detail for this presentation. The key thing that I will say, though, which is instructive for the art financing business and why the Fine Art Group does that business, is because we have been underwriting art in an equity context for nearly 20 years. We're audited by KPMG. We clearly have lots of investors to answer to. We have about 125 investors in about 20 jurisdictions. So the group has a very strong and impressive track record of buying and selling, trading art in a more institutional way than any other group, arguably in the world, actually. And with that track record, allowed me and the team to then launch the financing business, which depends entirely on having a very competent group of art underwriters, effectively. We're lending money against art, and we've got to get that underwriting value and approach correct. There's lots more that comes on top of it, but fundamentally we're hard asset lenders, we're lending against art. So we're using the competency and the track record that the group has accumulated over many years to do that. So that's the art investment funds. Then art advisory really grew out of that. So people can see what we have achieved in our art investment funds and trading on a proprietary basis in the market through the funds. And of course, people then look to us to access that expertise. So everything we do is in-house, and we have incredible experts who are very well known in the market. And they're looking for that art advice. It might be buying a single piece, it might be building a collection. We work with a lot of young collectors. It might be selling an entire estate, trust and estates that come up for sale, managing the sale of that. And I'll come on to some more examples later of the kind of deals that we do in the art advisory space. So this is just a quick summary. And then the lending business that we launched a couple of years ago that I manage. Coming on to art financing. Can I just ask as well, who in the audience has a finance background? Okay, yeah, quite a few people. And actually an art background, whether professionally or kind of indirectly. Yeah, okay. So I'm sure it's pretty obvious what art financing is. It is providing financing against art collateral. So to give you a really simple example, if you've got a $10 million Picasso and our specialists value it at $10 million, we will lend you $5 million initially for up to 2 years. So it's short-term financing secured solely on the art asset. So a bit like a mortgage on a house, the fundamental difference being the valuation, liquidity, inherent risk of art versus property is a very, very different proposition. And that is reflected in a number of ways, not least the way that we price these loans. So yeah, 50% loan to value, as I was saying in that sort of Picasso example, short-term maturity, 3 to sometimes 3 years, but these are short-term financings. A lot of our clients, we will roll their loans at the end of the maturity if they've been performing. The size of the loans, they can be anything from $500,000 to $150 million. So real range. Most loans in this industry are around the $1 to $10 million. The big loans do come up. We had 2 term sheets out last year at $150 million, so pretty sizable. This is a really important point. No borrower credit underwriting. So our business is art. We are art traders. We are art advisors. Art is our expertise through and through. So we're not a bank. We're a specialised finance lender. And as such, we are simply underwriting the art collateral. So we're not asking our borrowers what their credit position is. We're not asking for financial due diligence. Quite simply, as long as our borrowers are not bankrupt and we do a bankruptcy search like right before we close, we will lend to them if they've got good art. So that kind of confidence in being able to obviously assess, is the art authentic? Is it genuine? That's obviously the first question. If you can't answer that, clearly you shouldn't be in the business. The second question is value. What is the value? This is a subject that you could write many essays on and is a great subject for discussion. How do we think about value when we're underwriting art in this context? What we're actually saying is, if a client defaults, so if as a lender we have to sell the asset to recover the loan, what price do we think we can sell it at? Like lots of other markets, there is a requirement to not sell it to your mate for $5 or do something equally kind of underhand. You've got to get a fair price for the painting if you're going to sell it in a default. That generally means going to auction. So when we're valuing a painting or a sculpture for an art loan, we're looking at what is the low auction estimate, what is the reserve price that we are comfortable that we think this painting will sell at. And clearly you've got to be sensible, because clients, generally have a fairly good idea of what their art is worth when you're talking about sort of $1 million plus paintings. Generally, they always think it's worth a lot more than we as a lender think it's worth as collateral. So we have a collateral valuation. A bit like when the bank comes and, gives a valuation on your house. Sometimes they might value your house at lower than what you think it's worth. Similar kind of concept here. We will value on the basis of what we call kind of low auction estimate, sale valuation. And that takes incredible skill, expertise, access to markets, information. This is what the art market thrives on. The people operating in the market operate on, quite frankly, kind of lack of transparency. Unless you're in the market trading, you don't have the information to actually determine value. It's no good just looking up, clearly there's no art, there's no trading index of art. So it's a real skill and expertise, and that's what we have. We do take possession of the collateral. So once I've, just before closing, before I fund any money out the door, I'll make sure that we've got possession of the collateral in our storage facility or in museums. We're doing a lot of museum loans at the moment. So some things go on tour, multiple jurisdictions. We're funding something in the next couple of days. It's in Gothenburg. So you're talking about a whole raft of different international laws that apply because your assets are moving all over the world. So these loans are not kind of stationary. You're dealing with movable, high-value property, which is why, for a start, you want to make sure you've got control of it and possession of it. It would be very uncomfortable for me, to put it mildly, as a lender, if I need to go into someone's house, someone who's defaulted on a loan, and I've got to go into their house and find the painting and hope it's still there, and then sell it. That's a very different proposition than having control of it and being able to sell it immediately. You may have the legal right to go into someone's house and take their painting. Whether the painting is still there in the same condition, and they haven't swapped it for, we all know there's incredible fakes out there. That's not the business my investors want me to be in, and that's not the business that actually almost any other art lender in the world, and there are only a few of us, take the same view. What type of art are we lending against? What are the key features? We're talking about art that is liquid, art that has a secondary market. So if you think about what's coming up for sale at Sotheby's or Christie's in the post-war and contemporary sales, the impressionist sales, the modern sales, it's those kinds of artworks. It's not your, $50,000 print or painting. Might be an amazing painting by an amazing artist, but if it doesn't have a traded secondary market, so something with a track record of trading, we won't be able to lend against it. A lot of people think about, do we lend against old masters? So paintings from the 1500s and onwards. We do, but they're very difficult paintings to lend against. They're very old, which means there's a long history of ownership. With that comes a number of issues. More fundamentally, actually, for us, is the old masters market is, in our view, less liquid, a lot less liquid, than the modern and contemporary markets and the impressionist markets. So if you're looking at where is the high volume trading, it's in the modern contemporary market and the impressionist market. So that's where we feel comfortable taking risk as a lender. We don't lend against antiquities. We've just been to the Ashmolean, actually to see the Coons show. Don't know if you've seen it, but it's obviously on your doorstep, so go and have a look. We would lend against Coons, although very contemporary artist that has had quite a checkered market, actually, in terms of pricing. A lot of big inflated prices at times. If someone came to us with the balloon dog that they'd bought for 30 million, we would probably value it at, I don't know, just as an example, maybe 10. People have paid some big prices that realistically they're probably not going to recover. So this is a conversation we're always having to have. People come to us and say, well, I paid 50 million for this, or I paid 10 million for this. Actually, it's irrelevant what you paid for it. Most people overpay for art, and you've got to have a very sensitive conversation around that. We don't trade autos, we don't trade wine, and we don't trade antiquities. That's why we don't lend against them. We don't have the expertise, and in my view, you shouldn't be lending against an asset that you don't have any expertise in. We do lend against jewellery, and we do have expertise in the jewellery space. So we're doing a jewellery loan at the moment. It's about a $2 million loan over a beautiful Art Deco diamond necklace, just as an example. The types of financing structures. And this slightly sort of informs the question of, why do people use art loans? Why do people lever their art assets, art and jewellery? I'll answer that question first. Why do people use it? It isn't the cheapest form of financing. It's not, 1 or 2%. It's all in. You're talking about kind of mid to high single digits. These are very high value assets. And I think particularly, the younger generation of collector sees leverage, if it's used in the right way, as a smart thing to do, releasing capital to do something else with it. A lot of our clients are entrepreneurial, very cash intensive businesses, entrepreneurial activities, and they are simply releasing capital from a high value asset, looking across their whole asset base. They're leveraging their property, their investment portfolios, and they've got a massive asset that's not being levered. So, it makes sense if you're going to use it appropriately. So what types of, and I should just say, of course, you do also have people that have just got a cash squeeze. So we will finance things very quickly. We can lend $1 million in a week. We can lend $10 million in probably 2 weeks. And that's from someone presenting acceptable collateral to us to actually funding a loan. So accessing that kind of capital very quickly in today's market, maybe 10 years ago, there was a lot more liquidity and borrowing was a bit looser, but it's not today. A lot of our clients do have big banking relationships, and it will take them 6 months, even though they're very high net worth individuals. It will take them, 3 to 6 months to access something. As you're probably aware, if you've got a good deal on the table that you need fast financing for, it might be a property deal, sometimes it's buying more art. If there's an opportunity to acquire something at a good price, those deals are generally on the table for like a matter of weeks. And if you don't snap that deal up, it won't be on the table. So fast financing is a pretty key reason why people do use this product. It's also really straightforward for them. There's actually very little paperwork and We don't do, as I said, credit underwriting. So what are the types of financing structures? Straightforward term loans, so literally somebody who wants some financing for whatever reason for 2 years, straightforward. Credit facilities, this is where people want to know that they've got access to capital over a period of time should they want it. They won't necessarily draw down on that capital, or they'll draw it down in stages. That's really people that just want to know, certainty of available capital should they need it. Consignment loans. This is where people are consigning something to auction. So they've already made the decision they need to sell, or they want to sell their artwork, but they need some capital now. High value paintings, you can't just sell them the next day. You'd be, you're looking at, 3 major auction kind of weeks, if you like, in a year. And, sometimes you'll wait 6 months, 9 months, to consign something for sale. So to bridge that gap of the time where you've decided you're going to sell something and the sale proceeds actually coming through, because for high value paintings, hammer goes down in the room, you might actually have payment terms for 30, 90, 180 days for high value paintings. People are looking for financing in advance of actually receiving the sale proceeds. So we do that. That's kind of consignment advance loans. Purchase financing, we see quite a lot of this. So people identifying that they want to purchase something, they actually quite often do have the capital, but again, they just don't want to tie up all their capital buying that $10 million rickshaw. They'll use $5 million from us and $5 million for them, hold it for 2 years, 3 years maybe, and sell it, or hold it and probably keep it in storage, but they might hang it on their wall. Third-party guarantee financing. Guarantees at auction. This is a very hot topic in the press for any of you that follow the art press. What is a third-party guarantee at auction? Do people know what that is? No? Okay. This is where the big sales, so actually next week there's a big sale week in New York. It's probably about between 30 and 40% of those big evening glitzy sales, the artworks are guaranteed, which means they will sell in the room. What it is it's an irrevocable bid, which is from the auction house or from somebody else to acquire the work at an agreed price. So you know that the work is going to go sold in the room. For really high value paintings, a lot of times, particularly if the market is slightly softer, people want certainty that work is going to sell, and that's fine. If the auction house is guaranteeing the price of a work, i.e. they have put their money at play and said, we will purchase this work if somebody else in the room doesn't bid above, let's use that $10 million Picasso example. There's a $10 million low estimate of that piece going into auction. Guarantor is likely to, whether it's the auction house or somebody else, is likely to guarantee around that $10 million price. It might be a bid below, a bid above the low auction estimate. And then the seller's got certainty that it will go sold in the room. However, if people bid above that $10 million, let's say the minimum guarantee that's agreed is $10 million, if people bid above it, then obviously they will own the work, they will buy the work, and the guarantor isn't called on to buy the artwork. When an auction house does this, they often back off the risk with a third party. If you look at the sales, 30-40% of a big sale, you could easily be looking at 100, 200, 300 million dollars in one night. That's a lot of capital for an auction house to have at risk in one night. So they will back that off with third parties. We are actually a third party guarantor as well. So what we see now, very interestingly, and this is, I think this is a really new trend, is those guarantors who are guaranteeing works at auction, they don't have to put any cash up. So it's a contract only. If they're called to perform on, let's say you've got a guarantor and he is guaranteed 3 pieces, $10 million each. He's called on all his guarantees on one night. He wasn't expecting that. He suddenly got to pony up $30 million, and he either can't or he doesn't want to liquidate any of his other assets. So we're seeing third-party guarantors come to us for financing to ensure that they are good for their guarantee, because they will not get offered a guarantee again by any auction house if they don't perform on their guarantee. So that's that example. The lending process, I've kind of touched on this a little bit. How does it work? Everything we do is in-house. So our art experts will assess whether the collateral that's presented to us is suitable, whether it's liquid enough. We talked about all of that. And we'll give the client a valuation. If he agrees, if we come to a meeting of the minds on values, we go on to the next stage, which is all the due diligence around the artwork, all the more kind of financial due diligence on the loan, you know, who are we dealing with, KYC, AML, all of, sorry, I'm using terms, know your client, anti-money laundering. There's a lot of attention on anti-money laundering in the art market, as there are in every market now, which is quite right. We agree documentation, take possession of the artwork and funds. So actually conceptually, it's really straightforward. And we try and keep it really simple for our clients. When you get into the weeds of all the things you have to do, it gets a bit more complicated. This is the section where I was going to move on to the other piece of my role at the Fine Art Group. But before I do that, we could break it up for some questions. If anybody has any questions on the financing side, perhaps we could do those questions now, and then we can come on to sort of a second section where we do questions on the other bit of my role. Does anyone have any questions? Yeah.
Hi, thank you for clarifying this. I'm Chanpreet, I'm from India. I just wanted to understand, when you give these loans, what do you typically peg this against, like any equivalent of a home loan, a personal loan, because the interest rates vary dramatically.
When you say you peg it against,
for example, an interest rate against a home loan is the lowest, at least in the market that I come from, whereas a personal loan would be 3x of a home loan interest rate. So where does art secured home loan stand?
Yeah, so art secured loans, we're pricing them all in. So we and most other lenders are, we're a dollar-based business. The art market is dollars generally. So we're pricing our loans at US dollar LIBOR plus a margin, and that margin is in the kind of mid-single-digit range. There are some other art lenders out there that are charging a lot more than that, and why is it a lot more expensive? Well, it's a lot higher risk. The cost of capital for doing this kind of high risk lending is clearly not the same as a mortgage on a house, which is much less risky in terms of the underwriting. Does that answer your question?
Yes, it does. And just one more question, sorry. Third-party guarantors, the example that you gave, could you just clarify? So there is an owner of a painting, then there's an art auction house, and then there's a third-party guarantor,
Correct.
and then there's you, the Fine Art Group.
No, we would be a third-party guarantor.
Okay,
Yeah.
Thank you. Thank you so much.
Okay. Any other questions? Yeah.
In accountancy, fixed assets or assets have a depreciation. Mm-hmm. Is there appreciation in art, or is it just, how do you work it out?
Yeah, so good question. Most people obviously hope that their art is going to appreciate. That's not always the case. If we're talking about the kinds of art that we're lending against, we're obviously looking to lend against art that we have a very high degree of confidence in isn't going to depreciate during the course of the loan. If we thought it would, we just wouldn't lend on it. It's just not suitable collateral. And that's why, some very contemporary art that has a pretty flaky market isn't suitable collateral, because, you might find that it's it's reaching kind of $1 million at auction today, but in a year's time, nobody knows. We actually lend against a lot of contemporary art. We have one of the leading pricing experts of art in our team. She's been the head of our investments for 18 years. She has an incredible pricing track record. So we actually have a very high degree of confidence when we're lending on contemporary art. But we are one, if not the only, specialised lending company that will lend against contemporary art because of the volatility or perceived volatility of the contemporary art market. Living artists, most lenders just won't lend against living artists. We've got tons of living artists in our portfolio. So yes, it can depreciate. It can also appreciate. So we have examples where clients at the end of a 2-year loan, they ask quite often during the loan, oh, I've seen a sale, that Basquiat sold for $100 million. My Basquiat in your portfolio, can you reprice it? Well, it's not comparable. So that sale was a complete outlier, totally not an indication of the market at all. So no, we can't reprice it. So you're right, people do, even very well-informed collectors can get a little bit carried away when they see, rock star prices. Doesn't necessarily translate to their particular piece of art. Yeah.
Where does your funding come from?
Funding?
Yeah. Is it your balance sheet or it's a fund that you manage?
Yeah, so we actually launched a credit fund for this business. So when I joined, we structured and launched a credit fund. So it's a specialised finance company, credit fund, whatever you want to call it. So it's our own capital, comprised of a mixture of kind of high net worth investors, family offices, more institutional money. Because this is a credit business and, credit funds and the credit kind of investment business is, it's a very well understood market, and there's a lot of credit funds looking to deploy a lot of capital. So as a result, these are pretty good returns in the credit space. So we do have a lot of interest from kind of big credit funds looking to deploy capital, and we work with one of them. But yeah, it's our own credit fund, that we manage. So, going back to what I do, we deploy that capital, and that's really what I've been talking about so far. But on the other side, I'm also a fund manager. So I'm managing a credit fund with my team, and that is a whole other piece of work. So we're equity only currently, but we will lever part of our portfolio, so you get into a whole another kind of dimension of your fund.
So,
yeah.
Can you give us some information on the size of the loan portfolio, or that's not?
Definitely, I'm afraid that's confidential. Yeah. But what I can say, I've given you sort of a few examples of the size of our loans. They can range from $500,000 to we can easily fund $150 million loan if it's a good loan. At the end of the day, we have access to capital if there's a good opportunity. So, yeah.
In case of default, what does the enforcement process actually look like? How do you obtain clean title when you're dealing with these funky jurisdictions and you don't have a central security registry?
Great question. So this is where my legal background really comes into play. This isn't title security. So when we take security over the artwork that we're lending against, it's either a pledge, a lien, a chattel mortgage, depending on what jurisdiction you're in. So it's a security interest. So there's no transfer of title, but we obviously have to make sure we've got good security, just like the bank does when they've got a mortgage. It's a similar type of security to a mortgage that you'd have on your house. The security jurisdictions that we operate in are your regular, safe security jurisdictions. So the US, certain states in the US, particularly obviously New York, UK, Switzerland, Hong Kong, Singapore, When the art is travelling on exhibition, we then have to take security or make sure that our security interest is enforceable in that jurisdiction. So I've just done it in Sweden, we're doing it in Australia, we're doing it in Singapore. Would I take security in Brazil or China? No. There's a legal kind of, a basic legal premise, which is wherever your art asset is physical, not art asset, wherever your asset, whatever that is physically residing, that is your jurisdiction of security. So you've got to make sure that you've got good security in the jurisdiction that your asset is located. Obviously, art is movable, which is another reason, obviously, why we take possession. It's very different when you're lending against a house that isn't movable. So how do we enforce? So we've ensured, number one, that we've got good security and that we're the first lender with good security. So we're not second in line to another lender that's already got security. So that means searching lots of registers, depending on your jurisdiction, to make sure that another lender hasn't got good security already. So we've got good security. We're then basically selling the asset. So we have an immediate right of sale upon a default. That's the basic premise as a matter of law. And we look to sell it in actually the best way possible, because nobody is going to want to do business with you if you don't sell their assets well. We also have our reputation as a fine art group to protect. So our interests are really well aligned to our borrowers. A lot of borrowers say to us, how are you going to sell the asset if I default? And obviously I say, well, do you think you're going to default? First question, you're in control of whether or not you default. But okay, so if you do default, we will generally, but not always, place the work very strategically at auction. We'll get the right auction, the right time. If you've got high value painting, I'm not just going to stick it in a local auction house. We run very tight ship on the marketing of any work that we can consign for sale. It's in all of our interests to get the best price. So we really work our paintings. And actually we've got an example of a client, a current borrower. He moved his art loan from another lender in the States to us because he knew that we were going to sell his assets better than the other lender. We actually pitched to him originally as his art advisor, and he knew we were really good at what we did, buying and selling art. So he had concerns that he might default. He has, but it's not really a default. It's like an agreed sale. We've had a conversation. We're selling his art. He knew he was going to have to do that, so he moved it from the other lender to us, and we've actually achieved incredible prices for him, above anything he had expected. So we've done a pretty good job for him. Okay, last question maybe?
My question is kind of on innovation in the field. So on the product side, are you all looking at things like quasi-equity, converts, warrants to capture some of this appreciation upside if it might occur? And then on the model side, for art pieces, let's say less than $1 million, are there things happening around technology platforms and the like you're seeing in antique cars or wine and things like that?
Yeah, I mean, there is a lot of, I would probably call it noise, honestly, about technology in the art market, innovation. The art market is actually, if you look at it compared to other markets, is tiny. So the size of the art market trading annually is, between $55 and $60 million. This year, last year, it's around that price, that kind of benchmark. So it's a small market. You do see people coming in wanting to innovate, but actually it's fundamentally a very straightforward business, and there's a lot of innovation, often for innovation's sake, and often it doesn't actually have particularly good utility, in my view. Probably one of the most talked about things on innovation in the art market, talking to your point about kind of lower value pieces, is tokenization. So a group selling, a provider of tokenized artworks, give you an example, they bought a Warhol for, let's just say, $1 million, and they have 200, 300 investors taking, you know, tiny slices of that. My personal view is that art as an investment is, if it's really, you know, if it's well managed by, you know, people like us, then yeah, it is a really interesting and important kind of diversification for a piece of your portfolio. Is it suitable for the man on the street who's investing, you know, $1,000 or $2,000? I don't know. I think, you know, if that is the capital that you have to play with, to invest with, fine if you're happy to lose it. But generally people, you know, I just feel that's retail. And this isn't a retail market. I don't think it should be a retail market. So lots of people have a different view from that. But I as a lawyer, I think a bit cautiously about tokenization of the art market. Right. So the other part of my job, how many people in the room are lawyers or have legal kind of, no, not too many, okay. So I won't bore you with this for too long. We, as an art group, do lots of different things, as you've hopefully gathered. We provide all these range of services, from art advisory to investment, and with that comes a ton of legal work. These are some examples of the type of legal work that I do with help from colleagues. If we just look at the images, the first one, that was an estate sale. So that's where we had a long-standing client, that was the Jafali estate. We pitched that estate sale to a number of houses, beauty parade. We then selected the best auction house for the job. We then have to document that whole transaction, negotiate the commercials around that transaction, both for us and for our client. And then we have to actually see it through to execution. These actually made an auction record, so these are Botero sculptures, so we hold the Botero sculpture auction record. There's an infinite amount of kind of legal issues. You know, you're consigning something for sale. To your colleague's point about title, you've got to make sure that you've got legal title to the thing that you're selling. The auction houses, that they have to, you know, aside from the fact that obviously it has to be genuine, they've got to know that if they're putting something up for sale, they're not going to have a claim from a third party going, excuse me, that's my Botero sculpture. It happens a lot. When I was legal counsel at Christie's, this is one of the key things that, you know, people are trying to, auction houses, ourselves, when we're consigning for clients, look to protect. So in an estate scenario, you know, you've got to make sure that probate's been granted. In this case, there was quite a lot of legal wrangling. Big estates, there's always legal wrangling pretty much between beneficiaries. You've got to make sure that's all sorted out. So that's some of the legal issues there. This example, this is current. So there is a absolutely mind-blowingly just incredible sale, jewellery sale, that will be held at Christie's in June, this June in New York. This is certainly in our lifetime, this will be the biggest jewellery sale of all time. We are the advisor to the sale. That means handling a lot of aspects of the sale with Christie's. Before that, also, it meant, you know, selecting the auction house, an awful lot of work, selecting the auction house, agreeing the deal, again, for ourselves and the client, and working with Christie's to obviously ensure the best outcome of that sale for the client. So, yeah, if you're interested in fabulous jewels, have a look at that online. This transaction, Falcon Fine Art, so we, in the financing business, we acquired our most visible European competitor in January. So that was a finance acquisition, so that was a portfolio acquisition. I did all the legal work for that with outside counsel, but the majority of it was actually done in-house. The legal bill would have been off the charts had I outsourced all of that. And I'm pleased to say my legal bill came in on target for that. That involved, acquiring another art loan portfolio. So yeah, it's pretty complex executing your own portfolio. Buying someone else's portfolio has a lot of additional complications. And I'm pleased to say we're actually the first people that have managed to acquire someone else's art portfolio. No one else has managed to do it. And a lot of that reason is just it is extremely difficult, and you've got to have a lot of in-house competency to do it. So we were really pleased with that transaction. This is just a sort of general picture around some of the more kind of operational side of what we all do, but from a legal perspective, insurance, shipping, storage, there's legal agreements with all of those, there's risk. Essentially as an in-house lawyer, your job is to manage risk, make sure you're only taking on risk that is appropriate, limiting your risk, making sure you haven't got wild indemnities all over the place, making sure that you can stand behind whatever risk you're taking on. So I would say generally all of the kind of legal work that I do for the group, and it's the same really for any in-house lawyer, is identifying risk, deciding when it's appropriate to take on that risk, at least legally, and then, managing it going forward. So, okay, I'm going to ask you two choices. Financing case study or guarantee case study? Financing guarantee study? Guarantee case study? Okay, not much preference, fine. We'll just do a financing case study then. So this is an example of an entrepreneurial collector who he had access to a painting, again a deal that's a good deal that moves fast. He needed some liquidity to fund that deal. We assessed, we're talking about assessing a deal within like 24 hours. Can we do the deal? What price can we do the deal at? Meaning, how much capital can we provide into that deal? Negotiating the term sheet, papering the deal, doing all the due diligence in, a couple of weeks. We always inspect the paintings physically. So our specialists go to wherever it is. Often it's, it's Geneva, it's Zurich, it's London, New York. Those are the typical locations where most art is stored, high value art is stored. They'll open the crates, properly, obviously, authenticate it, condition check it. Condition is really important. This is an impressionist work. The older the work, the more important generally. Condition is to the price of something. Something's in poor condition, but it's by Monet. It's really going to suffer. A $20 million Monet in good condition might be $20 million. In poor condition, it might be $10 million. So just because it's by Monet doesn't mean to say it's automatically got a big price tag on it. So in this case, we valued it, lent $5 million for 2 years. We took possession of the work in London. It was already in storage, so that was pretty straightforward. As I said, actually most of the art that is presented to us, I'm afraid, is in storage anyway. Then at the other end of the deal, you've got your exit. So not always, but sometimes people exit their loan by selling the asset and they appoint us as their sale agent to do it. For some people, that's why they appoint us as their finance provider in the first place, because they want to appoint us as their art advisor on the exit. So we market and handle the sale of the painting. The proceeds of the loan obviously repay the loan. Sorry, the proceeds of the sale repay the loan. And the remainder, of course, goes back to the client. Really quickly, trends in art finance, before I just do a quick trend in the art market. Trends in art finance, I think very clearly the continued, and I think this will continue even further, concentration of specialists. So I think this applies to a lot of markets where the role of the specialist provider is pretty well cemented. I think gone are the days of people thinking that they can do everything. You know, even if you look at the auction houses, actually, you know, they've really honed what they are best at doing and where they take the least risk. Christie's, for example, actually use us as their finance provider for their clients. So they, in my view, have taken a pretty smart decision, which is they are not also going to be a lender. There's a number of issues, conflicts of interest. That's not their core business. You know, banks generally, I think everyone knows banks are focusing on their core business. 20 years ago, banks were doing some wild art financing. We have been called in as a group to go and assess those loans when they've defaulted. We've had one example where a bank lent tens of $millions of a painting that wasn't genuine, and we went in and we had to tell them, sorry, that's worth, I don't know, $10,000. So, you know, people now, I think, are much more aware of knowing, you know, what business they're in and what they should be doing. So I think, you know, specialist finance providers like us is a trend to stay. The use of the product, 100%. We've never been busier. This product is here to stay, and it is increasing. The utility of the product, the ways that it's being used now, even from 5 years ago, I think has really changed. So, yeah, sophistication of collectors. I think everyone who's in the market, you know, this is a well kind of understood dimension of the market. People are increasingly financially sophisticated in their approach to buying and holding artworks, and with that comes a financing tool. Not for everyone, but for a lot of people. Market outlook, general trends in the art market. Just to wrap up on this. So a couple of themes that are really coming. These themes have been coming out at least for the last year or so, certainly in the very visible way. Female artists. So the increasing dominance of female artists at auction. You know, most artists at auction are still male by value and by volume, but there is a real interest in female artists. So you're seeing auction records of female artists. You know, every season there'll probably be some more female artist records being broken. Next week in New York, we had some auction records last season being February, and in the November sales before that. Jenny Saville is an artist that has performed very strongly in the last couple of years, including the last sale. Bridget Riley, Carmen Herrera, just to name a few. So there's definitely a trend of interest in collecting female artists. African American artists, similar. We've seen some amazing prices. Kerry James Marshall made the auction record last year, I think, for an African American artist. And you know, you're seeing a lot more African American artists being consigned to these big, you know, what we call marquee sales, and they're reaching phenomenal prices. The cause effect, the cause market. This slightly blows my mind, I have to say. Okay, these paintings have sold for, as you can see, kind of $500,000 million, these paintings. Shortly after this, there was a cause floating, I don't know if you call it sculpture, but a floating object in Hong Kong Harbour over the Hong Kong Basel week, caused a lot of stirs. A cause artwork sold in that season, so about a month ago, sold for something like $15 million. There's a lot of history as to why this has happened, and it hasn't just happened by chance. It's been a very well-managed artist, and yeah, I won't go into the details, but I think it's pretty interesting that people are paying these kinds of prices for this work. We are presented with a lot of cause. As soon as you've got a big price at auction, or you know, you see a trend, a big trend, we suddenly start, people that have paid these crazy prices suddenly come to us for financing. And we've had this with cores, and we've turned it all down. Or we've said, well, yeah, okay, we'll take it, but we'll take it at the low auction estimate that it went in, not at the 20 times low auction estimate that you paid for it. I'm not going to talk about whether or not they will recover their money at some point, but at the moment we're just not comfortable kind of taking that sort of view on this kind of art. So that's all I have to say. Thank you very much for your questions and for listening. And if anyone has any questions now, or if you'd like to see me afterwards, I'm just conscious of the time. Yeah? If anyone has any questions now on that particular section.
But first...
Right, you said how all art is traded in dollars.
Mm-hmm.
Does the value of the dollar affect the value of art? Like if it's a really strong weak
Yes,
dollar, and
it's a really good
London
question.
high, would it be sold for more?
So not all art does trade in dollars. So the auction houses, generally the art market, people generally think in dollars. So people kind of reprice stuff in dollars. But the currency of the auctions is the currency of the location. So auctions in London sell in dollars. I can tell you, just before there was a big auction, literally like day after what was supposed to have been Brexit Day, and the auction houses were thinking of repricing for the first time ever a sterling sale in dollars, because obviously there was like massive concern there about FX risk on the day. That didn't happen, and the houses decided to keep it in sterling. So what often does happen is you will buy a piece in sterling, and you think about it in dollars because you've hedged your sterling to buy your sterling painting from dollars because you're long dollars, and you can only sell that painting in sterling 3 years later, and you've eaten quite a lot of your potential profit in FX risk. It is something that people in the art market don't think about enough. We hedge currency all the time. I lend in dollars. Very occasionally I will lend in another currency and we'll hedge it. But it is an issue in the art market, is that people, you do buy in other currencies, and often people have to rebase it one way or another into dollars or another currency, Hong Kong dollars, and there's some exposure for people.
Yeah.
Hello.
Hi.
I'm thinking the default in your case is very different from the typical default in which the lender can take possession of the collateral. Mm-hmm. So I'm wondering, given that you have the expertise, the firm has expertise in pricing collaterals, mm-hmm. and is able to sell the collateral at quite a fair price. Mm-hmm. So would the firm benefit from doing a typical loan in the event of default?
A typical loan. So would we benefit from a default? Is that the question?
Yeah. In
Okay.
which, under the scenario that you can take the position of the collateral. And
that we
sell it to the
didn't
market.
take possession.
Yeah, but usually the lender can take possession of the collateral.
Yeah, we take possession of collateral unless it's on a museum tour or something, or it's just with a museum. So yeah, we don't benefit from a collateral sale in a default, because essentially the client is getting the difference. So we will take from the sale proceeds what's due and payable to us, and yeah, we charge a default fee, because there's a lot of work that goes into actually selling a painting well. The days of just sticking a painting in the sale and hoping it will sell for a $5-10 million painting, you don't do that. You have to make sure that it's really worked. So yeah, we charge a fee, an administration fee for default sales. So yeah, we make money that way, but otherwise we don't.
I'm interested in two remarks you made. One is
about the condition of an artwork, and secondly, more recently, in a sense, the politics surrounding an artwork, say, for instance, Kerry James Marshall or Jenny Savile. And in a sense, contemporary art is those are the two areas that are unstable in a way, the perceived political, ethical value of a work and its material makeup. Are you finding that basically you fund painting for its longevity? And in that sense, do you find that your group or your part of the art market is actually determining what works remain valuable?
Well, yeah, I mean, the art market is self-selective, if you like. So, you know, people buy, if people don't buy an artist, it won't have a track record, a trading track record, therefore it won't have value, monetary value I'm talking about. You know, we all buy, you know, everyone at the group, pretty much at the Fine Art Group, you know, is interested in art, and we might buy works of art that, you know, might be $1,000, but we buy them because we think they're great works of art and we love to live with them. But is your question, it's self-perpetuating, because if people don't buy something at auction, if you put an artist into a big sale, the auction houses don't do this, right? They don't take risks like this. They don't put in an artist into a sale that they don't think is going to sell. Like, that's bad business. So they're only going to accept something for consignment into their sale if they think they can sell it. And if they, you know, what determines if they think they can sell it? Well, obviously, if there's a market, it might not necessarily, you know, artists have to have a break. They have to have their first auction sale. And, you know, we saw that last season with a number of African-American artists, actually. First big kind of marquee sales that they were in. It might be, you know, those artists have had a big run up to that sale. So, you know, they've been represented by really important collectors, have been buying their works. They've been represented by important kind of super dealers. They've been exhibited at important institutions. So, you know, there's a whole kind of ecosystem of, you know, what ultimately kind of filters through into the art market. And yeah, we're part of that. We do have a small fund that I would say plays an active role in that, because we're buying artists in one of our funds it's a 10-year fund. So we're future trend spotting artists. But generally we're playing in the market that is already established.
Thank you very much for the talk. I'm quite curious how, if at all, you interact with some of the larger blue chip commercial galleries, and kind of to that point, what you make of the fact that such large galleries as Gagosian, for example, are launching these kind of art advisory firms that seem to be trying to participate in this market.
Yeah, I mean, look, there's an inherent conflict of interest. If you're representing an artist as a gallery, as a major gallery, if you're representing an artist, how can you give impartial advice in relation to that artist that you're representing? Like, doesn't take a genius to work that out. But conflicts of interest in the art market, I have to say, is a real problem, because, you know, really, really high net worth individuals, really well informed, really smart people in lots of areas, sometimes don't necessarily apply the same discipline to their commercial interests as they apply in their art buying. And identifying these conflicts, you know, people get really close to people. Collectors can get really close to people at galleries. They can get really close to people at the auction houses, and, you know, there's a social relationship, and, you know, they think they're their friends, and they may be, but they're also trying to sell you something. The difference with us is we're not trying to sell anything, because we're not trading, we don't have stock to trade. And I think that's a really important distinction. So yeah, that is a major trend at the moment, very topical. And in some cases, it's fine, it makes sense, but just making, you know, buyers, making sure they can identify those conflicts.
You've represented the complexity and the fascination of your field and shared it with great frankness and detail. I'm sure we all appreciate that enormously. Thank you all for your interest and your questions, and thank you, Freya.
Pleasure. Thank you for having me.